Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Vancouver Resource Investment Conference, and we're joined by the silver guru, author of the Morgan Report. It's great to see you, David.
Thanks for having me.
Now, David, what's the current status with the silver markets? I think we saw 17 go back just over $17 now, but overall the prices have been languishing somewhat. So what are we seeing right now?
Well, it's more languishing somewhat. It's been devastated since the high of 2011 and down under the cost of production for most primary silver producers. Been in more than a lull for about 4 years. Once we hit that high from, that we accelerated from 19 all the way up to 48, I thought it'd take 2 to 3 years to consolidate and digest those gains, so to speak, and start moving up again. It's been 4. I really believe the final low is in early November of 2014, so just a couple months back. And a lot of people think that's not it. I do. I think that really is the low. So there's a lot to be looking forward to moving into the new year.
Right. We actually had a viewer question we were talking about, and we had a question come across on Twitter asking, do you think we're going to get one last big drop in the silver price?
I do not. I won't stake my reputation on it because I don't want to lose it, but I said the final low was in on the 1817 intraday low in March 27th of 2013, and that was a valid statement for 14 months. That was the low, but we broke that, as we all know, and now this new low is, I think, 1415 intraday on a spike low, huge volume. It wasn't a key reversal, but close to it, and I really think that's it. It's possible we could see another low. Again, there are many that are forecasting that because the dollar is so strong. I think there's been a sentiment change because of a lot of things, primarily what's going on in the currency markets.
Okay.
So the move into gold and silver has bottom in my view. I don't think we'll see another big low or a new low.
Right, and you've pointed out that the paper markets have really been distorting the market. So can you explain that concept a bit for us?
Yeah. There's a lot of people that, quote unquote invest, or put in quotation markets, in the silver and gold markets, that basically invest in a paper proxy that distorts it, because what it really does is add to supply. When you have a certificate that says 100 ounces, 1,000 ounces, 10,000, a million, whatever ounces of gold or silver, that is money that could have, or maybe even should have, gone into the physical market that doesn't. It's a paper, so it's an excess supply that really doesn't exist, but yet it's treated by the market as if that supply exists. So it's really diluting the market with a paper paradigm or a paper proxy. So it's adding to supply in an imaginary way. Now, I want to be fair, because most people that are in the futures markets understand what they're doing, meaning that they understand that it's really just a paper proxy. It's a contract that derives its price from the amount of papers that's pushed back and forth between the bulls and the bears.
Right.
But to be objective as possible, it increases the supply that doesn't exist.
Right. Now, I think you've said that some of the biggest silver investors are sitting on the sidelines right now. So what is it going to take for them to come back?
I really wish I knew. I think the two dynamics going forward are always basically the same, and it's investment demand and industrial demand. Investment demand from large entities has been flat for several years now. If you look at the silver holding companies and ETFs, they really have been flatlined for years. So at this price, where you can buy this magnificent commodity under the price of production for most companies, I think it behooves a holding company like PSLV or Central Fund of Canada or some of the others to buy silver at this level, but we haven't seen it, but it would be nice to see that. And that's on the investment side. On the industrial side, we had a big move in the early 2000s from about 35% of the market to 50% of the market, roughly 550 million ounces a year in industrial demand, but that's also been flat for several years now. It had that big increase and then it's flatlined, just like the ETFs. So the big increase and then they flatline. Going forward, the Silver Institute put out a recent study that there would be an increase in industrial demand by about 28% to 2018. Primarily led by solar, but other industrial applications as well. So that's looking at another, what, 20% would be another 100 million ounces or so.
Does that signify a big change for you in the market?
Yeah, it is. It signifies, one, how important it is in an industrial, as an industrial commodity, and how diverse it is. And also, you get that shift up in a pretty much inelastic mode, because most industrial applications require a very small amount of silver, so the price per unit is so small, the price commanded by silver itself does not have much effect. So I probably didn't explain that very well, but if you have a $1,000 refrigerator and you use $8 worth of silver, if the price goes to $16 because silver went from 18 to 36, doesn't bother the refrigerator manufacturer.
Right. Now you've pointed out that when the economy does poorly, silver tends to do well. So do you see any problems with the U.S. economy on the horizon?
Well, there's twofold. I mean, silver is more of a good time metal than gold, I think. So there's times when there's, big demand drives that drive silver higher in a good economy, and then also it does have a safe haven status like gold. In a real down economy, it's got mixed results based on, years of study that one of the books I've read discusses. But today, yeah, I think that silver has got as much potential as gold does as a safe haven status for a multitude of reasons. One being that there's the offtake from industrial demand and a small supply, and secondly, it's more affordable. So as gold continues to go higher, more people will wake up to the fact that gold's moving, what can I do? And a lot of people will be priced out of the gold market, and they'll move into the silver market.
Yeah, I guess that there's a perception that, it's a poor man's gold, or, seems to be a lot of younger investors in silver too. Now, China and India have been huge buyers of gold. Do we see similar trends in silver?
Yes, India had a huge demand in silver last year, 2014. China is very kind of secretive about their actual gold consumption, although there is public data, obviously. Kus Jansen's probably one of the best at digging out what their offtakes are. Silver, all the silver that goes into China is for smelting purposes, whatever they mine to keep internal, just like gold. And there's some that comes out, obviously, because it's contracted to come out in various forms, mostly industrial type, bars, blocks, wiring, paste, you name it. But China is very, very much aware of the fact that silver is a high technology metal. And when I was there in Beijing years ago, one of their primary concerns was how to recycle all of it. They didn't want to waste any of it. And that's when it was at a lower price than it is today. So there are a lot of applications that the Chinese are aware of, that they continue to use. They're driving a lot of the solar demand and will continue to do so. So even though they don't talk about it, if you go to their gatherings that the Silver Institute sponsors every year, and you have an ear to the ground, so to speak, and listen to it, they're very aware of the silver market.
Interesting. Now, what's your take on the silver miners? We've seen some shutdowns happening. What are your thoughts there?
Thoughts are they're unsustainable at this price level forever. They will maintain and do the best they can and high grade and cut back and have no overtime, and they'll do whatever it takes to stay in business for as long as they can, but you can't lose money forever and stay in business. So there's pressure on these companies. I expect that most of them will hobble along for quite some time, longer than most people think. Most people think that business is very easy. It's not. And maybe I'm being too generalized, but the price is under the cost of production. It costs $22 an ounce. It's at 18. Turn off the lights and turn them back on when the price is higher. It's not that easy, especially for a mining concern. So they'll continue to mine even though it's not profitable, because it's actually cheaper from a longer term perspective, and that's the key. Longer term is what? And that varies company to company. So you have to do a break-even analysis on an individual basis to determine whether or not it makes sense, or when you should shut down, or at what point, et cetera. And I don't have those studies. I'm not privy to them. I've got my ideas, but again, the main idea is they'll actually struggle along for months longer than most people would expect.
Well, just as we wrap up, what are you recommending investors do right now?
Well, if they're underinvested, to be looking at the gold and silver market. If they're new to the market, obviously you should get in. If you are in this market I think you should hold. I don't think you should really add to positions. It depends on the individual investor. What's their risk tolerance? I think maybe the best way to wrap it up, Vanessa, is to look at the fundamental facts of why you purchased. And if those fundamental facts remain, then take a deep breath, relax. Price is a temporary thing,
Right.
and just hold.
Yeah, absolutely. Great. Well, thank you so much for joining us today, David.
My pleasure. Thank you.